You would dispute that there's no rival close to Tesla in 2022. This analyst, he says just across the board in terms of software, in terms of access to chips, the best batteries, the longest batteries, all through vertical integration, a key differentiator, and margins are actually going to go up, he expects. Clean auto gross margins 30% on 1.4 million cars in 2022. That all sounds bullish. You don't buy it.
Listen, let's be honest. Consumer Reports just put out their reliability report. Tesla is ranked 27 out of 28, the second least reliable car in their report. Let's look at the numbers. This isn't what I think. This is factual. BYD is outselling Tesla in battery electric vehicles in China. VW is outselling them in battery electric vehicles in all of Europe. We think in the U.S., Ford will probably take that mantle, or GM next year. The batteries they're putting in their car are from CATL in China. Every single car out there that's coming to the U.S. can either match or beat them in real-world mileage. And with respect to autonomous driving, they rank dead last. The New York Times just put out a great expose where they allege that Tesla effectively put out this painted black video in 2016 that's still on their website, where they effectively, this is alleged, faked the entire video and the car actually crashed, whereas they say in the video the car's driving itself. So they don't lead in any technological aspect. The only advantage they have is in superchargers. I think that's why Elon Musk is aggressively trying to get the $7 billion taken out of the BBB bill, because if that $7 billion is kept in, all of the other guys who are coming to the U.S. who can beat them on real-world range, who can beat them on autonomy, who can beat them on technology, will now have that supercharger network, and Tesla will have no advantage. With respect to the $140 billion in the Build Back Better bill for autonomous tax credits, Elon Musk, he's saying he wants that taken out. I think this is gaslighting. Listen, he's already increased the price of his cars over the past month by roughly $7,500. So he's already taken that money the government's trying to give to the auto buyer and put it in his pocket. I think what he's trying to do is he's trying to get the additional $4,500 for union cars to be taken out of the bill. And I think the reason he's trying to do that is because that would give Ford and GM an advantage over Tesla. So this idea that he's trying to, expand EVs for all, I mean, his actions say the exact opposite. So I think you got to look at what he's actually doing.
Hey, Gordon, are you bullish on the global EV market in general? And do you have any way to play that's not short? And let's say there's something you like. You could do a spread. You could short
Right.
Tesla because you hate it so much. Is there any other half of that? Is there another half of that spread? What would you buy? What would you go long if you short Tesla?
Joe, that's a great question. I don't hate Tesla. I just think Tesla's grossly overvalued, and I think it's grossly misrepresented. I think BYD is a great company. I think they're doing great things. They make their own batteries. I think that's one that you can be positive on. But, Joe, let's take a step back. Keep in mind, battery electric cars were only 2.6% of global auto sales. Year to date, battery electric cars are trending at about 5% of global auto sales. So when you ask Ford, who's been doing this for 100 years, GM, who's been doing this for 100 years, VW, to completely change their entire company to go after a 5% market share, it's not that advantageous. If you took a step back and you look at the amount of cars Tesla sells, right, not the market cap, the 800 or the roughly 900,000 cars they're going to sell this year versus VW selling 11 million. Like, these guys aren't worried about BEVs. So I think there's other technologies that are very promising, fuel cell and hydrogen. But to your question, I think BYD is a great company. Warren Buffett, the greatest investor of our time, likes it too. I think that's one you can look at positively. And with respect to next year, I think Tesla has big problems. Gross margins, their CFO said their gross margins are going to come down. Why? They're ramping 2 new fabs in Texas and Germany. And the Chinese fab effectively had no cost because they're all back and loaded. When they ramp these new fabs, their gross margins are going to come down. So with no new cars coming next year from Tesla, I think not only do you have a gross margin risk, but you have a volume risk. So I think the spread would be to be negative on the guys like Tesla and to be positive on the guys like BYD.